This is Alan Bush with the Daily Financial Forecast for Tuesday, July 18th. Stock index futures mostly higher today, with the S&P advancing to new highs for the year, with corporate earnings being the catalyst to take most indices higher this morning. Also, as far as economic reports, we had retail sales coming in up 0.2% when up 0.5% was expected. We had industrial production in June declining 0.5% when unchanged was anticipated, and capacity utilization a little disappointing at 78.9%. That compares to the estimate of 79.5%. However, we had the July housing market index as expected at 56. So many analysts still appear to be bearish on balance despite all of the strength. So still thinking from a contrarian point of view that the trend is still higher, at least in the short term, for stock index futures. And in the currencies, traders are selling the dollar index on the belief that the Fed may be near the end of its tightening cycle, and possibly this next meeting, that would be the July 26th meeting, could be the last increase from the Fed. Also, we had a dollar index on Friday falling to its lowest level since April of 2022. In the interest rate futures markets, we are seeing futures higher across the board, especially at the long end of the curve, with government bond yields around the world falling for a second day. So many central banks apparently are near the end of their tightening cycle, not just the Fed, but elsewhere. We have no Fed speakers today, with the Fed in a blackout period. Probability of the Fed raising rates at the July 26 meeting is at 97%, with just a 3% probability of no change. And there is now a diminishing chance of a second rate hikes later this year, which I am on board with, for no additional rate hikes once this July increase is out of the way. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.